Good afternoon. Today is Sunday, November 23rd, 2023, and this is the weekly Bitcoin price forecast, looking at where Bitcoin went in the last week and where it could potentially go in the future. I actually recorded this morning and then come to find out there was no audio. So I'm going to re-record this and we'll just talk through it. So this one may not be too long. Monthly chart. We're on the monthly chart for Bitcoin and look at what a month it has been. I think this is actually the worst month in absolute terms. Drops over here, like this was like 20,500. This is 20,900. So these are pretty comparable right here. May of 2021 to here. This is a 20% drop. This is much higher. This is like a 35% drop. But still, overall, it dropped down to the area that we talked about and actually went a bit lower too. So it went all the way down to 80K, 70 something K, depending on what chart you're looking at. But I always talked about like 86,000. 86,000 being the key number for Bitcoin, just because of the fact that this is number one, this is your 21 month moving average here. And this is historically proved to be a pretty good stopping point, number one. Number two, as we will see on the weekly chart, there is some imbalance right here that had not gotten cleaned up just yet from the April run up. So this ran up really fast. And then, there's some area left here, some liquidity. And now, I mean, we got two options right now. This is absolutely bearish. Like it's bearish right now. I can't quite say that I'm bullish. Really, it looks like you have a couple different options, right? We could come lower, and if we come lower, I'm thinking we'll probably come to about mid 70s. This is a strong area of support for a couple reasons. Number one, it was the previous all-time high back in March of 2024 and remained the all-time high for quite some time. And then it was also the low from 2025 when we had the first crash earlier this year. So you end up having support here. If it starts to break below this, all right, well, okay, maybe you could go down to 60s. The lowest I think we could see is maybe 50s and whatnot. And that is where the realized price is at current. And we can maybe talk about that a little bit later. But, right, all I can say right now is this is pretty bearish overall. Let's look at weekly. We see for weeks, really ever since that flash crash that we had in early October, it has just been a downward spiral. And this is the imbalance that I was talking about right here. So this had been cleaned up. That went back up to the upside. This had not been taken care of yet. This had not been taken care of. And so it finally did come down here, and we see that it just remained at this 87 level. Hey, again, this could be a potential area of balance because we see here that this was some type of support here, but this is bouncing off of the 50-week moving average. We see that it broke clean through here. The next area of major support is kind of in this area that you have balance here around the 60s and 70s, going back to former all-time highs and whatnot. So we'll see how this ends up playing out. Right now, the momentum absolutely is down, and there's not signs of just slowing down just yet. So we'll have to play that day by day. Look at the moving averages; they are curling downwards, and this one's flattening out. So if I look at the 200-week moving average, you're sitting at about 66. We haven't really hit the 200-week moving average until way back when, but that generally marks a bottom for you. Daily chart. Again, since this, you made a new all-time high. This was, kind of top. And then you ended up just coming down here violently on the 10th, which you had major, massive liquidations that day. You made a double top, which actually this was somewhat of a lower top, and then just lower highs and lower highs. And now we're looking to see, hey, are we actually going to make another high again? Another, lower high. At this point, it could come back up to the hundreds or whatnot, but we'll actually see how that ends up going. But this now is acting as a hurdle. So again, you would have to get back up to past 106 and then again past 110 and past 114 before you could even start to kind of considering to say that this is bullish and maybe this is just a deviation. But as I've been talking about as well, if the broader market has a crash, Bitcoin is likely going to have a crash as well. And then you have things like the NASDAQ that are not looking too high right now. The NASDAQ, the S&P, and the other stock indexes, they are overall in a bearish trend, and they have been. So what I'm seeing right now on the 200-day is this your 50 moving average in blue. It's crossed below your 200, which that is the paramount death cross. So, I mean, that's definitely not a good thing. Even if I scroll back, the last time that you had a death cross like that where the 50 crossed below the 200, You almost had one here. Almost had one here. Not quite. The last time actually was realistically. I'm not counting all this, but I'm just looking at the initial cross. That initial cross happened in January of 2022, so almost 4 years ago. 4 years ago, this was the last time that this happened. So that is overall pretty bearish. Do I think that this cycle is like last cycle? No, I don't. Just because of the fact that, again, you have different players in the game at this point to push it higher or lower. But retail, it's largely a big institutional game at this point for Bitcoin, and with those institutions comes institutional buying and selling. So a lot of people are focused on the buying aspect, but again, if they do buys and sells, in which we will look at the amount in which the ETFs specifically have bought and sold over time. Let's actually take a look at this now. But I mean, really, for the most part, this is what I'm looking at on the daily chart. You had this big range right here, all the way to here. This was a range, and we see very clearly that this is broken below this range. To make lower lows and whatnot, just continuous lower lows on the daily chart. So that's definitely not something that you want to see. And realistically, this is somewhat of a head and shoulders pattern, to where you had one lower high, a new high, and then like another low, and then your neckline is right here, and then it just continues down. So we'll see. I don't know where the bottom is at this point, but again, we go week by week and just kind of see what we have. So as for right now, my thoughts are that we may go a little bit lower, even down to your mid 70s, and then before turning around and getting some type of levity that will take you back up. But again, if the broader market is going down, this is probably going to go down as well. So we'll see what we have. Always got to look at the news, what's coming out next week for honestly not much. Core PPI, retail sales, unemployment. This is a bunch of nothing really. And you got Thanksgiving here too. So this should be a relatively slow week, at least news wise. And then, Black Friday, you probably won't have much action there. A lot of people on holiday. Vacation and whatnot for the 2-day break that we generally get over here in America. But it is still something to pay attention to. So, the next major thing that we'll have is we would have normally had a non-farm payroll that first week of December, but it's been so jacked up lately with the government shutdown. And then the next one will be on the 10th with your federal funds rate. So we will see. We'll see how that ends up shaking out. So the last thing I wanted to talk about before I hop off of here was the total spot ETF flows. So they launched in 2024, the very beginning of 2024. It's almost 2 years ago. And we've just seen, this is all the data, and we've seen just how it's gone up and down. So this is the yellow line here is price. And we saw that initially as it came out the gate, there was a lot of buying from ETFs, and price responded accordingly. And then it went into a period of almost stagnation where, hey, they would sell some, buy some, sell some, buy some, sell some, buy some, sell some, buy some, so on and so forth. And then, we went into this next period where, hey, the ETFs are really buying a lot, and there's not too much sell pressure here, all the way from late October to, the December, really. And you hit this new all-time high. And so from that point, the price responded accordingly. And then you went back into this period of sell some, buy some, sell some for a little while, and we see prices responding accordingly here. A whole bunch of buying activity going into July, and then really it just went back to that cyclical pattern. But what I'm seeing here is like you reached a fever pitch in buying here, and from there it has been all selling. It's been all selling as of late since October and whatnot. So what I'm saying is there is quite a bit of influence that these ETFs have over the market, because I mean you look at this; these are $1 billion buys that we're seeing. I wish I had a moving average to show you like what the actual average number per day is. They probably have it on here, somewhere. But anyway, I guess I cannot find it at this point. But seeing what the average number is overall, I don't know, maybe like a 21 or a 50-day moving average at a certain point. But you look at it here, and as they sell off, the price falls. And if they find the bottom and we watch the price at it, that could end up going back up too. So I'm not going to hold it too long. Again, I've already done this today. It's the second time. Unfortunately, I didn't get any audio the first time, but it is what it is. So this has been Chris Talks Crypto. Check out a crypto-based resource on christalkscrypto.com, and I will see you all on the moon. Take care. Bye-bye.